Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Today, we're going to talk about inflation, what the trend is right now, and then some key real estate facts that just came out from Lawrence Yun, who's the chief economist for National Association of Realtors. Just came out a couple days ago, so we're going to talk about it. Okay, so we're going to talk about. I've got a couple bullet points and a couple slides. Really quick, though. We'll start with inflation and rent, because that's the thing that it's kind of getting people right now. We've got some charts on rents because rents are actually still going up.
Right. So, in some of the videos we've had comments and people saying, hey, rents are down in my neighborhood, or, where I'm in my market, there are vacancies, there are incentives and that sort of thing. And I kind of go back to what I usually tell you is that real estate is hyperlocal, but the numbers that we're talking about are national. That's what NAR tracks, and that's what Lawrence Yun tracks. So what he's saying is that rents are still going up, but what he is seeing is that the numbers look like they're going to maybe either top out or start going down a little bit.
Right. So the rate of acceleration is declining. So the rate of acceleration go to zero, which means rents will just stay the same. Okay, but even if rents don't actually have to drop for inflation to go away, because inflation measures the monthly change of rent. It doesn't measure what rents are. So if rents don't change for a year, in the CPI they go, oh, rents are zero. If rents fall, then that is actually deflation. That's deflationary.
Right, and that's what we saw, 2009, 2010, 2011. That's what we saw when we were having deflation.
Okay, the first quote from the article. Housing inflation due to rising rent is one of the major items still showing acceleration, but is soon expected to come down as well. Rents increased by 8.35% in December, year over year. It's highest reading in more than 40 years. That's not the highest rents were, that's the highest change in rents.
Right.
Private sector data in recent months have been pointing to a near zero growth rent in some major cities, and robust apartment construction will raise rental vacancy rates. Let's talk about that really quick. There are a lot of apartments being built, but it's not a one-for-one, like a new apartment wipes out a house. Why is it? Like a single-family residential rental wipes
They're not the same market, right? They're not the same customer. An apartment customer is generally different than a single-family residential customer. An apartment customer tends to be single or a couple people. Single-family residence tends to be a couple people and maybe some smaller people.
Okay.
That's not to say that people in apartments don't have young ones, but it just kind of tends to be that people in single-family homes are more likely to have people under 18 with them than people in apartments.
Okay. I know in Vegas, the number I heard was that the number of apartments being built in Vegas is about 1% of the total. It'll add 1% to the total number of total units, which actually, it sounds like a lot, but it doesn't cover the number of people. It basically only covers people moving here. Remember, we still have people coming here, and that's one of the things for our market, for Vegas. Okay, now what we're going to do is we're going to flip over and talk about mortgage rates and the Fed rate changes. I'm going to start with reading this quote from the article. Okay. The 30-year mortgage rate dropping under 6% is now a distinct possibility. The gate is beginning to open for homebuyers who got shut out in October and November when the rates went above 7%. However, there's still a housing shortage and not enough listings. So there's three things in here. First of all, why are mortgage interest rates dropping when we know that the Fed has 250 basis points increases coming?
Okay. So mortgage rates, yes, there is a relationship between mortgage rates and the Fed rate. So we're going to cover that. But mortgage rates are much more complicated than that, right?
Okay.
So remember, mortgage rates are looking at long-term rates, and they have to beat inflation and all this other stuff. So the Fed rate has to do with the overnight rate that banks charge each other to borrow money. And so all the other factors that go into a mortgage rate are much more complicated than that. So mortgage rates are much more forward-looking, much more long-term looking. Okay. The Fed rate is much more short-term looking. The Fed rate is looking to deal with short-term loans like car loans and credit card loans and things like that. And that's why you're seeing those rates absolutely skyrocket. I mean, if you looked at your credit card statement lately, it's not uncommon to see that your APR is 30%, which is like, what? What is that? So it's not uncommon. Car loan rates, again, really high, and that's going to impact car sales. And that will have a ripple effect throughout the economy. So, do watch for that. That is important. But it also goes toward what the Fed is trying to accomplish, which is bring down inflation.
Okay, the next thing we're going to show you is this really good chart called rent growth at its highest since the early 1980s. Now, the amazing thing about this chart is at the very bottom, you see a zero. That means rents went up what percentage? And if you look back at the beginning of the 80s, they went up like 9% per year at the annual rate. And then you can see now they're going up at a little over 8% per year. But what's amazing is only one time ever in the last 40 years did rents decline year over year, ever. And that was 2010. Now in Vegas, we had a little bit bigger of a decline. We had like a 6%. We had like 5 to 8% decline in rents in a year. We got hammered though comparatively. So to the people who think, oh, rents are going to crash, and look, history is against that happening, because first of all, you've that rent increase thing that's accelerating is inflationary. And if you look back to the previous numbers in the 80s, that was all inflationary rent increases. So rents are falling. So unless we get back to a deflationary economy, if we continue to have 3 or whatever percent inflation and we have wages going up, rents are probably not just going to magically. It's not like your employer's going to give you a raise and your landlord's going to start giving you a cut on the thing, especially with a really low number of vacancies and available rentals, right?
Right, and particularly like right now, if you're looking at it, inflation and the growth in wages, inflation is increasing at a higher rate than the growth in wages. So that kind of plays into it too. It goes toward what we're saying, that rents are not likely to see a significant downturn.
Okay, the next chart we're going to do, this is national median home price growth. This is another year over year. This is not the price of homes. So when you see the thing going down on the right, that doesn't mean home prices went down. That just means the year over year change went down. This likely will go negative into next year because when you see that spike that's 2020, early 2022, you're measuring year over year. So because that was the hottest, most price appreciating market ever in real estate, as you can look from this chart, since they've been measured. When we look at year over year, it'll likely be down. But in order for home prices to meaningfully fall, if you look all there from 2008 to 13, you would have to have literally 5 or 6 years. Because remember, it took 5 or 6 years for home prices to fall. That isn't likely to happen, Juana. Why is that not likely to happen?
So, we've kind of beat this to death, but it's not likely to happen because 40% of homes are owned free and clear. Okay. The other 60% have a substantial amount of equity. Unemployment is relatively low. There's just a lot of support for the real estate market out there. We don't have really hardly any inventory either on the sales side or on the rental side. There's really no indication that, barring some black swan event, would cause real estate values to tumble precipitously. Okay,
before I show the last chart, I'm going to say my opinion on interest rates increasing. They were necessary because it was getting out of control. We could not have housing prices increasing year over year at a super high rate without and people being able to borrow money at 2.5%. That was like a recipe for disaster.
Well, it's pretty much what we got.
It's what we got, but the Fed acted too late to tame inflation. And of course, inflation needed to be whacked a bit. But here's the last slide, and this goes to what Juana said. Okay, this is the inventory of homes on the market. This is, if you look at that line at 2 million, that's the median of normally where homes are in a normal market. If you go back to like 2005 to 2012, 13, there were more homes on the market than people could buy. That could be absorbed. So what that caused was prices to fall because you had an imbalance, you had disequilibrium, right? When you come all the way to the right, you see that red circle as the last couple of years. We have not only have historically low inventory, we have it's declining again. If you look at that all the way to the right, it's starting to drop again. And this is the thing that's really stopped home prices from tanking. It hasn't completely wiped out the real estate market because there's just not enough homes for people to buy. So a lot of people, there's less transactions, but this is one of the reasons why there's less transactions.
I think it's the main reason, honestly, that there are less transactions. There aren't enough homes on the market that people want to buy. The ones that are on the market are not necessarily the homes that people want to buy, because if they were, they would be bought.
Okay, last thing, then you get to finish it out. If what he said is right and mortgage rates drop below 6 again, more people come back into the market than, not more than last spring, but more people come back in the market and inventory keeps dropping, meaning people are just saying, yeah, I'm not going to put my house in the market. And we have more buyers chasing fewer listing. What does that mean? That's kind of like a weird place to be in.
Look, the minute that you have more buyers chasing less inventory, you have the environment for multiple offers, for prices going up as people are bidding against each other, and we're kind of back to square one. I don't think it's going to be like it was last year, but I think that you will see a little bit of scarcity, maybe in the spring as far as buyers are concerned. Not necessarily just because there aren't enough homes for them, but also because the homes that are on the market are more desirable than the homes that are on the market now, and they've been waiting for the right home.
I agree.
So if you liked the video, if it was interesting, entertaining, if you learned something, if we made you laugh, please subscribe, hit the notification bell, and share the video. If you want to leave us a comment, we would welcome it. Tell us where you're watching from. Tell us what you think about the market. Tell us what's happening in your market. We're interested in having a conversation with you. Even if you disagree with us, you're more than welcome. And we'll see you on the next video. Bye.
Bye.